Welcome to Trading Lounge and the US indices. We'll be looking at the S&P, the Nasdaq, and some of the stocks within the Nasdaq. And with the S&P here, we had a account here that could have a possible top in play. So we had a beautiful wave 3 here, then an A and a B and a C for wave 4, and then we're counting 5 waves up as wave 1 and 2 and 3 and 4 and 5. So making the fifth of the intermediate wave 3 here. So this was quite a reality here, and we had to work with this. We've got another count in line with the Nasdaq that will take us higher. And of course, we don't want to fight the trend, and we need to gather the evidence on the way. So when we got to the top here, the point was that let's have a look to see what we get here. Do we have an impulse wave coming down, or do we have a corrective wave coming down? These are the things that we needed to have a look at, and that's what we're going to have a look at. And so from this move coming down through here, this S&P chart here is a CFD, so it's made up of the cash market during the day and the futures market at night. So it can have, it's trading around the clock much more than the cash, but it's always nice to go to the cash market. So let's go to the cash market and have a look at a 5-minute chart on this little section in here. So from this top here, we've got this top here on the cash market, okay? So here we can see that we've got there's little 5 waves down for wave 1, back for wave 2, then 1, 2, 3, 4, 5 here for the 3rd wave in here, the 4th wave and the 5th wave. So we have 5 waves here. We have an impulse wave. So after a corrective wave, we'll have another 5 waves down. So at this point here, really what we've got is that a little bit more price action needs to come into play here at the moment. So what we need to see for this to be a corrective, this could be an A wave and a B wave and a C wave, okay? It's a corrective market, okay? But it's only corrective when the price over here moves up and takes this top out here. So that high here needs to be breached on the cash market before we can say that this is an A wave and a B wave and a C wave. If that is breached, then we've got a bullish market, and then we'll be going higher. That top here will be taken out. It's as simple as that. On the bearish side, this can be down for 1, back for 2 here, and then down for 1 of a smaller degree of structure, then back for 2, and then moving down from that point. It also could be 2 in terms of a bear market. We could have this as wave 1 here, and then we can have this as the A wave here, the B wave here, and then 5 waves up here for the C wave for wave 2. So wave 1 is over here, an A and a B and a C wave over here for wave 2, and then going down from that point. And the wave C up here would be wave 1 and 2 and 3 and 4, and then 5 here, because it won't go very far here. It'll come up to these highs and react here anyway. So the trick here is understanding what I've just said, but then also looking for the trade setups in this case. So coming back into this space here, I think it's best if we just go into the tick chart here to finish this little commentary off here for this before we look at a bigger bullish picture. So there's a couple of ways to look at all of this. When we're looking at the cash market, it just counted as an A wave to here, a B wave to here, and a C wave to here. I'll just grab a couple of these here. Just bear with me a second. I'll just copy 1 and 2 here. We'll just have a look at a few different things. So it's possible that this there's different ways of looking at this, so we've just got to be careful. I mean, we could look at it as 1 and 2 and 3 and 4 and 5, but the problem with wave 4 here, it's really over breach this wave structure here. So it would be better putting either an A and a B and a C wave here. It can go like that. Yeah, that's all it can really go at in looking at this case. But I need to take the cash market on board as well here. So what we'll do here is that in terms of trading here, what we can do, we can see that from this low here we've got 1 and 2 and 3 and 4 and 5, a bit of overlapping wave structure here as well, but there's just too many ways this can go about. So what we do is I can't draw on this side of the price, so I'm just going to draw here. So basically we've got wave 1 and 2 and 3 and 4 and 5. So the wave 5 has a fifth wave finish. So it will finish up here somewhere. It will probably come to the top here somewhere like this here. And then it's going to fold back down here and have some sort of correction here before going up again. So once that high here is in place here, then all you need to do is put your I can't draw that past that, but that high has to come in play first, and then the market has to drop away. Then you've got your reference point to go along at that point. Okay, it's just as simple as that. I'm just going to leave it as that. We need that trade set up for that. It's possible to count this as 1 and 2 and 3 and 4 and 5 down here as wave 1, and then looking at this as wave 2 here. So in that case, I mean, we have to look at all of the possibilities. So in that case, then we want to look at this on the bearish side. We would look at this move up here. If this was 5 waves up here, I'll just take it to the top here, okay? There'd probably be another little push up there and you can adjust it, but main point being here, I can take some of the tools over here like the Fibonacci retracement. So this is the 50 and the 60% retracement level here, okay? So of that possible top being in play here. So if what we could say, if the this is group 2 here, 65, 72 and 80, okay, so if the 72 becomes a retested resistance, because that will be at the 61.8% mark as well, if that becomes a retested resistance, then we can look to short it at that stage, okay? So that will take care of being long and being short in terms of putting the trader hat on and leaving the analyst hat off the table, because yeah, we need to work out if this is actually the top here. So on the, let's go to the 4-hour chart. This is the alternative count here. So coming back to this wave 4 here, we've got wave 1 and 2 and 3 and 4 and 5, and wave 1 and wave 2. Now this is in line with the NASDAQ, okay, and the NASDAQ stocks. In this case, we could look at all of this being the 3rd wave up here and the 4th wave and then the 5th wave to move up. So I want to make this a little bit clearer in, we'll have a look at the NASDAQ now, and then we'll have a look at some of the stocks. So with the NASDAQ here, we're looking at this being wave 4 low here, and then 1 and 2 and 3 and 4 and 5 here for wave 1 and wave 2 here. And then I was looking at all of this here being 1 and 2 and 3 and 4 and 5 here for the 3rd wave. We've been working this trend for a while now, as you know. And then looking for the wave 4 to come into play here, and then wave 5 to the upside. If I've made a mistake here, then the mistake would be that we have to move wave 4 over here, and then we would have this as 1 and 2 and 3 and 4 and 5 here. So this wave 5 would come in top here, and then this would be the top here. But I'm not prepared to go there yet, and the reason for that is quite simple. When we'll have a look at the things driving this market. So we've been working with Amazon here. So I'm just going to clean this up a little bit. So with Amazon here, it was very clear to me that, because if I'm not clear on the Elliott Wave count, then I put on my trader's hat and I start using the trading levels and setups, and also I look to other markets as well to see what's driving those markets or influencing those markets, and have a look at their wave counts and see how they fit in, and and really try and nut down what's actually happening. So in this case with Amazon here, we looked at this being an A wave and a B wave and a C wave, and I wasn't even sure about that because the wave C was a little bit short here, but then we had a beautiful 5-wave structure up here, which we'll look at in a bit more detail, and then we had wave 2 come back in a beautiful ABC correction right to the 61.8% mark, and then on the daily chart we had our trigger here, but on intraday we had our trigger into this space here. But the main point here, as you can see, is that we have wave 1 and 2 and a strong 3rd wave moving up here, and wave 4 coming into play, and then wave 5 up here. Now this wave 5 area up here is just an extension of the 61.8% mark of this here. So from this top to this low here, 61.8% mark up here. And I get that, and then I drag it off to the trading levels. So we've got major level here, then we've got the minor levels, which is group 1. So group 1 goes to 100, 200 and 300, and then the next one is the 1500, then 1800, so on. But so these levels here, then I break these levels down between here. So between 1 and 100 and 200 here, we would have the sub levels. So there'd be 10, 20 and 30 as group 1, the midpoint being the 50, and then group 2 in here, the 65, 72 and the 80. So really it's the Fibonacci numbers as 1, 2, 3, 5 and 8 here. So when I've drawn this box here and here, is that I've taken into consideration the extensions and also the 100 here, because 1 is the strongest number in the market, then 5, then 8, then 3, and here I've got the low of group 2 and the top of group 1 here. So that's my range for the correction. That's what I've done here as well. The lower end of the thing at 65 roughly, and then the top here will be at 23 here. So that's the space that the corrections will take place in. But the main point here, going back to the S&P and the NASDAQ and so on, is that this structure is just simply not finished. We've got 1 and 2 and 3 and 4, and we've still got wave 5 to go up here. So on the tick chart here, just to take a bit of a look in at this here, this is the wave 4 here. This was just such a nice 1, 2, 3, 4, 5 here. So easy to count, so nice. And then we had this beautiful picture of this A wave, B wave and C wave with 5 waves in it for the C wave coming back to 61.8%. And not only that, we also had this here as 1 and 2 and 3 and 4 and 5 here, then the A wave, the B wave in 3 and then the C wave here. So really, you know, our target was this top here, that then, as I mentioned, then we could also take this in top here, but it doesn't really matter. So that triggered nicely and pushed us up into wave 3 here, because it was the third of the third in here that made this push up here. So it was basically the spring being loaded and shot out, and then wave 5 up here to make wave 3 top here. So wave 4 is in play now. So the 38.2% retracement level is at the top of this rectangle box, and the wave 4 of 1 less degree is below here. So it's quite possible that we can come down into this space here, and that's fine. But on the trading this long here, it may only just come down to this wave 4 here and do something weird. So as a trader, we don't want to miss what's going on here. So normally we would have this to the top here, then we'll bring it down. This is the trigger, then this one, and then we can bring it down to this one. So this one might be a little bit dangerous in here, but if you get a nice tested support on this level here, then you can go with that. And tested support is, you know what tested support is. The breakouts basically the arrival, the reaction, the first high above the level, then there'll be a little ABC pattern, and then it will find support here. So over here, you need to wait. I can't draw on this side here, but you need to wait for the first high above the level. That will be the first high above the level, and then you can bring it to here, then bring it down, and so on. But tested support, get your first position on here, get the second one on 10, then 20, then 30, then you wait. Then you wait for support to become on the midpoint 50 here, and then that will be your last trade to the upside. You don't want to start adding beyond that space there. This will be group 2 in here, by the way, 72. We can put that, just do that while we're here on the hop. That will be group 2 there, and then minor level to be the 1200 here. So 1 and 2, the Fibonacci numbers going off again. So that's the ratio that we're working with, Fibonacci as a price ratio. So yes, wave 4 can come back to here. However, it might just bounce off the 8. This looks a bit corrective here, so we'll see. But look, as a trader, it don't matter. Support on here gleans the first position, then you build in on top of subgroup 1 here, 10, 20, and 30. And once 30 becomes the support, then that severs the pull of the larger number here being the magnet, and people start to think of the next number 5 here, and it gets pulled up. We're traveling quite quickly from that point. So that's that. Google's much the same as well. I mean, I don't have it counted, and we haven't counted it, but it was the same. So we were looking at going along here, and looking at 1 and 2 and 3 and 4 and 5 up here. Then we're looking for the ABC, so I'll just clean this up, and it may come down further as well. So really what you want to do here is, if you're going to go long here, if that is the case, because it can just fail from here, if you're going to go long here, then you need that set up on top of group 1 here, okay? So on top of the 30 here. So the 30 is you know, you have to ask yourself, what is support? I mean, people go, yeah, support, no worries, or resistance, no worries, but you know, has it been tested, and where is the trigger? So this little pattern here, which I call the classic trading levels pattern 1, and then there's a classic trading levels pattern 2, and then there's the overshoot pattern. So there's only really those 3 types of patterns that can occur at the levels, and you can see them on our website. Alrighty, I think I'll leave it at that. I've rambled on long enough, so yeah, all done and dusted. Cheers.